Hello, today I have with me Phil Caldwell, Chief Executive of fuel cell technology company Ceres Power. Hydrogen might be the energy supply of the future, but it's not cheap. It's more expensive than fossil fuels at the moment. At what point does hydrogen become financially viable?
It becomes financially viable today at about $2 a kilo, and that might not mean an awful lot to you, but it's the reason that number is out there is because that's the point at which you can generate hydrogen from renewables versus actually getting hydrogen from a fossil fuel base, and therefore there's not much benefit to doing that. So, but that's now achievable, and 2/3 of the cost of the hydrogen is really the energy input. So as we're seeing, power prices fall on the back of cheap renewables, that's really enabling this transition towards hydrogen as a fuel of the future. So it's about scale and getting the capex side down on the electrolysis side that produces that, and also obviously the trend on power prices, and also high efficiency, which is where solid oxide has a role to play as well. So it's lower cost, high efficiency is really the target for electrolysis to generate hydrogen at the economic levels that we need. But it's totally achievable.
In what sort of time scale is that sort of is it imminent?
Yeah, I think it's in a time frame of the next 5 years. I think you're starting to see announcements now, targets put out there from around the middle of this decade onwards, where that becomes viable.
What's your view on the shift to electric vehicles? Stopping production of petrol and diesel cars in the UK from 2030 is one thing, but what about battery sizes, journey range, infrastructure, that kind of thing? I mean, will we have mass adoption by the end of the decade, do you think?
Yes, I do, actually. I think I think it's behavioural. I drive an EV now, and it's fantastic. And it used to be range anxiety was the big issue, and most vehicles now will do more than 200 miles. So I think most people, for the majority of journeys, EVs are the best solution. And I also think that this is controversial, but eventually there'll be a real stigma as EVs come to the fore around driving combustion engine vehicles that are creating health problems and are potentially a higher carbon. So I think it will get to a tipping point.
Potentially bad news for Top Gear then.
Have you ever driven an EV? I mean, they are fantastic. I mean, my EV does like 0 to 60 in 4.5 seconds. It's much more exciting than driving a combustion engine vehicle.
You've just published your results for 2020. 15% increase in revenue to 21.9 million was driven by license fees and provision of technology hardware. Could you give us more detail on revenue generation and expected future trends?
Yeah, sure. So you're absolutely right. If you look at that revenue, it's increase in license fees to the likes of Bosch in Germany, Doosan in South Korea, and others. I think one of the things that's really pleasing about that revenue is it's 100% export. So we're a great example of a British company selling technology to the Japanese, the Koreans, and the Germans. You don't get that every day of the week. And it's growing. So the other thing that we said is the order book has grown as well. So we've got just under 100 million of contracts at the order book or pipeline stage. So we're very confident on continuing a high growth trajectory on revenue, built upon a combination of license fees and engineering, basically. And again, we talked about the business model earlier. That's very significant margin. So a lot of that revenue goes straight through to funding the bottom line of the company. But where this company really gets to be profitable is the deals that we do are license deals, and we get royalties per kilowatt once these technologies come to market. So our major customers like Bosch and Doosan are building out capacity for start of production in 2024. So really where we get to the inflection point of value in this company is when we get royalties from mass production. So we're building revenue year on year and using that to really fund the growth of the organisation and putting money back into the organisation to open more markets, more applications, because that gives us the future value for the business.
Operating losses almost doubled to 14.8 million last year, but if revenue does grow rapidly, that should more of that should drop through to the bottom line. What does the path to profitability look like?
Yes, it's what I just articulated. It's really, we're in this growth phase now where we are funding a lot of the business through engineering services and license revenues, and we expect that to continue. And then when we get to 2024 and royalties, that's really 100% margin revenue, which is the profitability of the organisation. So I think it's that kind of time frame that we're looking at for profitability.
Okay, when you've just raised £181 million from a share placing at £10.60, so could you just give us an idea what the money will be spent on and how long that will last?
It's going to be spent on growth and this new area of expansion into hydrogen electrolysis. So running the technology in reverse to actually produce green hydrogen, which is a huge emerging market. And we think it's sufficient money to take the company through to profitability. One of the beauties of this business model is it is asset light, so we're not having to invest capital into building large factories, etc. We do that with our partners, such as Bosch, such as Doosan, etc. So really, it's all about innovation and technology and generating high quality jobs in the UK, science and engineering jobs. I mean, during COVID, we've created 100 new highly skilled science and engineering jobs in the UK to export technology to the world's leading companies. So, this is a fantastic business opportunity for UK companies like Ceres, and we want to be world leaders, and hence this capital raise positions us for that. I think some investors kind of are looking at income stocks and profitability, but this is about growth. This is a high-tech growth stock which has the potential to be a world leader, and that's where we're positioning the company.
And retail investors were given an opportunity to get involved in the fundraising at some point, weren't they?
Yes, we did. I mean, we did an institutional placing, and we also had an offering so that retail could participate as well. Both of those, the institutional and the retail, were heavily oversubscribed, so we obviously had to scale back both.
Phil Caldwell at Ceres Power, thank you very much for joining me today.
Thanks for your time.